Hi everyone, and welcome to Blockchain Whispers Elementary School of Crypto. I hope you enjoyed our previous elementary video where we covered basic trading knowledge. Today, we will be taking you further on this journey to become a successful trader with our third lesson in elementary series. Blockchain Whispers is known to be one of the most accurate crypto predictions team in the world, and this is our treat for the crypto community, all for free to learn and gain knowledge about crypto and trading. In this video, we will cover the subject, volume, trend lines, support and resistance, where we will be explaining the following topics: volume explained, order books, depth chart, market gap and supply, blockchain whispers approach. We do it all for you at BCW Premium. Volume is a number of coins traded in the crypto exchange market during a given period of time. For every buyer, there's a seller, and each transaction contributes to the count of the total volume. When buyers and sellers agree to make a trade at a certain price, it is considered one transaction. On crypto exchanges, volume is shown as 24-hour volume, meaning that if only 5 coins are traded in the last 24 hours, the volume of that day is 5. In crypto, we use bar charts to quickly determine the level of volume. These volume bars can help you spot trends. When the bars are higher than average, it is a sign of strength at that particular time and price. So basically, these bar charts of volume are used to confirm price trend. If the volume increases when the price moves up or down, it is considered a price movement with strength. In case a breakout occurs without any significant volume, we can suspect it's a fake breakout, also known as a fakeout. Irrelevant to whether the price is up or down, if the volume is decreasing, we know for a fact that the momentum is declining, and we can assume the possibility of a reversal. On this image, you'll see an example. If you want to confirm a trend of a specific coin, we need to look at increased volume activity, irrelevant to the direction. Volume can tell us a lot. It tells us the market's activity and liquidity. Higher trade volumes on a coin means higher liquidity. This means better order execution and more active market to connect the buyers and sellers. We use various of trading tools in technical analysis. However, volume is one of the simplest tools to factor in when considering trades. Volume gives us an idea of where the people are shifting their money to, from one coin to another. This is how charts move in waves. Also, a sudden increase in volume due to an announcement or news can cause a breakout. This spot is where Blockchain Whispers will position you so that you can feel the rush of watching your portfolio grow bigger and increase in value. An order book is an electronic list of buy and sell orders for a coin organized by price. An order book lists the number of coins being bid or offered at each price point. To understand the order book, you need to know that the order book is constantly updated throughout the day, meaning we can in real time see how heavy the buy or sell pressure for that specific coin is. The information helps us to make a better informed decisions. For instance, massive more buy orders compared to sell orders. It will indicate the coin is about to move higher in price due to buying pressure. So why is the order book important? Because the order book is also useful in pinpointing a coin's potential support or resistance level. It's also important to know that the stop limit orders may be hidden, so that should be taken into consideration while examining the order book. Another way to look at support is when the price of the coin gets cheaper. Then the demand starts to show on the order book, and you can easily identify the support level by looking at the bid on the order book. In the support area, you can notice a significant amount of orders to buy the coin. On this image, you'll see BTC found support at $6,263. Another way to look at resistance is when a price of a coin starts to increase. The resistance will start to show in the order book in the form of sell limits. It will also be known as resistance area. You can easily identify the resistance level by looking at the sell area on the order book and notice a significant orders to sell the coin. On this example, BTC found resistance at $8,200. The depth chart is a visualization of the order book. In simpler terms, what you see in the order book is put into what is called depth chart to easily visualize the bids and the asks. The left side of the chart is green, representing bids, and the right side of the chart is red, representing asks. The depth chart sums up all the exciting orders, sorted by ascending in the case of sell orders and the descending in the case of buy orders. The chart will display all of this in a stacked order. If you compare buy and sell orders, you can visualize whether the price will most likely go up or down. Generally, if buy orders outweigh sell orders, the price may increase. However, order books can be deceiving, so use depth charts as a reference to get an idea. Here's an example of depth chart. Market capitalization, commonly referred to market cap, is one way to rank the relative size of the cryptocurrency. It's calculated by multiplying the price by the circulating supply. Using market capitalization to show the size of the coin or the company is important because size is one important characteristic in which investors are invested, including risk. It is also very easy to calculate. Let me give you an example. A company with 20 million coins selling at $100 a share would have a market cap of $2 billion. Given the simplicity and effectiveness for risk assessment, it can be helpful to determine which coins you are interested in and how best to diversify your portfolio with coins of various market cap sizes. Big coin caps typically have a market cap of 10 billion or more. Investing in big coin caps does not necessarily bring you huge returns in a short period of time, but over a long run, these companies generally reward investors with a consistent increase in value. Small cap coins typically have a market cap of between 300 million to 2 billion. These small cap coins could just be out of an ICO, meaning very young, or they could serve a smaller market or even new industries. These companies are in most markets considered higher risk investments due to their age, the markets they serve and their size. Smaller coins with fewer resources are more sensitive to economic slowdowns. However, in crypto market, we respect the small cap coins because they provide us with the opportunity to buy the coin in its early stage for a low price. So now, what is the difference between calculating supply, total supply, and max supply? Circulating supply is the best approximation of the number of coins that are circulating in the market and in the general public's hands. In short words, it means the coins that you and I can invest in. Total supply is a total amount of coins in existence right now, but debating any coins that have been burned. When we speak of coin burn, we refer to the process of taking a certain amount of coin out of circulation and sent to an address where they cannot ever be spent, because the private keys of such address is unobtainable. But as we explained on video 1 about blockchain, this public address is available on blockchain for anyone to review and see how much coins has been burned. Coin burn can be done for various reasons, such as destroying unsold tokens or coins after an ICO or token sale, rewarding the token or the coin holder, or making new tokens or coins, also known as proof of burn. Max supply is the best approximation of the maximum amount of coins that will ever exist in the lifetime of the cryptocurrency. Why is the circulating supply used to determining the market and the capitalization instead of the total supply? Let me explain. Circulating supply is a much better measure for determining the market gap, since coins that are locked, reserved, are not able to be sold on the public market are coins that can't affect the price and should not be allowed to affect the market gap as well. Support and resistance are the basic part of understanding technical analysis, yet they are highly regarded as crucial concepts and used widely. Imagine support and resistance like barriers where the price bounces or breaks these price barriers. In principle, this seems simple. However, identifying which will break requires more analysis and reasoning. The more times support and resistance levels are tested, the stronger they become. Support is a price area where traders set buy orders and where the price is expected to pause due to demand to purchase the coin. Support and resistance levels are not exact numbers but an area. The more times a coin tests a certain price level of resistance or support without breaking it, the stronger the resistance or support is. When a support or resistance level breaks, the strength of the follow-through move depends on how strong the broken support or resistance had been holding. In this chart you can see that the price was in downward trend and reversed when it hit the support area. Just like we explained the support, the resistance is very similar. Resistance is the price area where traders set sell orders and the price is expected to pause due to sell pressure to sell the coin. When the price pauses through the resistance, the area could potentially become support. In this chart you can see that the price was upward trend and reversed when it hit resistance area. Once support and resistance areas are identified, it provides useful information to potentially enter or exit a trade. When price is heading towards a support or resistance area, there are two outcomes. Bounce from the support or resistance area and go the opposite direction, or break support or resistance area and continue with the direction it's heading until a new support and resistance level is identified. There are two ways to trade this, the aggressive way or the conservative way. When support and resistance areas are being tested, a conservative approach would be where you wait for confirmation before entering a trade. For example, let's say the price is going down and it's about to test support. Instead of placing an order on support line, you can wait for the price to bounce off the support area and then enter the trade safely. The same goes with resistance. Await confirmation to test the resistance area before selling in case it breaks resistance and price goes further up, making you better gains. To approach this in an aggressive manner, it would mean you enter the trade slightly above the breakout in hope that the price continues to rise. This approach is not preferred. However, if used correctly, you make a hit and run trade by trading the breakout. Trend lines are probably the most common form of technical analysis, as well as the most unutilized method. If used correctly, they can be very accurate. In simple terms, a trend line is the movement and direction of the price determined by using support and resistance points. Price moves in waves, also identified as zigzags, where these represent circles. The trend line is connected through each individual peak or through. It is important not to force the trend lines to fit the market, but to actually plot them the correct way. Drawing trend lines is easy and not complicated at all. To draw a trend line, you must connect two tops or bottoms. Keep in mind, if you draw trend lines touching wicks, you must follow that rule. So if you start a trend line from a wick, you must connect it with other wicks. Same thing if you're using candlestick body. You need to connect from one body to another. There is this misconception that the price can only go up or down. There are three directions a price could go: upwards, downwards, and sideways. It takes at least two tops or bottoms to draw a valid trend, but kindly note that for these trend lines to be confirmed, you need to connect at least three peaks or throughs. Once the 3 points are connected, your trend line is identified and confirmed. It is also important to remember that trend lines become stronger the more times they are tested. An uptrend occurs when the demand to purchase the coin is exceeding those who wish to sell, and hence the price moves upwards, forming an uptrend. An uptrend is identified through a series of successfully higher peaks and throughs. When an uptrend is broken, we can expect either sideways movements or a downward trend reversal. Downtrend occurs when the sellers decide they need to get rid of the coin and the sell power exceeds the buy power, causing the price to drop, forming a downtrend in the process. A downtrend is identified through a series of successfully lower peaks and throughs. When a downtrend is broken, we can expect sideways movements or an uptrend reversal. Sideways is often referred to as a period of balance between buyers and sellers. Another word for sideways movement is range. Sideways trend is identified through a series of adjacent peaks and throughs. In this case, these are support and resistance areas. Sideways movement is often a continuation pattern, meaning the price continues the trend after a pause. However, one must wait for a breakout, either up or down, for confirmation. Most technical tools are trend following, meaning that they are designed for markets which are moving up or down. These technical tools provide the limited data if the trend is sideways. It is rather obvious what to do in an uptrend or downtrend. However, when the market is moving sideways, you can either trade from support to resistance or stay out of the market. Sometimes no trade is the best trade. As you're watching this video with the help of Blockchain Whispers, you are now learning how the market works. Here, we covered some topics of technical analysis you should know. Congratulations on making it this far, because even if you know 98% of the content, just 2% that missed can be costly to your decisions in the future. Our goal at Blockchain Whispers and here in this series of free videos is to make you a better trader. A trader that can start acting on his own and trust his analyses and instincts with knowledge. To further up your game and get the power through analyses our team does daily, you should join our premium Blockchain Whispers channel, where you get the signal we identified, important Bitcoin moves, and the tactics to help you put the odds of great profit in your favor. To join the premium channel, it is simple. You can register on www.blockchainwhispers.com and the process itself explanatory from there. This will give you the extra edge as we have a full team of traders and analysts to give you the best picks. These are some of the results we achieved with their respective gains since call. As you could see, PoundyX gained 2000%, BLN gained 650%, ONT gained 850%, Theta gained 200%, and ZIL gained 300%. These are the results you can expect from our long-term signals. These signals are carefully chosen by our fundamental analysts and go through some rigorous criteria to obtain the green light to signal. Here you can see how the signal is delivered. ZIL was one of our gems, which turned out to be one of our absolute gold mine. As you could see, the signal was given on the 5th of March 2018. The signal also included a description to why ZIL is fundamentally stable coin and also why we believed it will make huge gains. We will now show you the chart of ZIL so that you could see how our carefully selected gems performed. The signal was given on the 5th of March 2018 and the price jumped a whopping 400% in 67 days. Our premium members gained 4 times their invested capital in ZIL within 2 months and 1 week. These are the opportunities that the crypto market offers, and we are proud to hold the community and the crypto space close to heart so that everyone can make money. Thank you everyone for watching today's elementary school video of Blockchain Whispers School of Crypto, where we covered volume, trendline, support and resistance. You have now successfully learned how to analyze volume to determine the strength of the movement. You also learned how to draw trend lines to uncover the trend and how to determine support and resistance and how to successfully trade it. Stay tuned for our next elementary lesson, where we will be focusing on how to find a coin that will make you rich. Make sure you subscribe to our YouTube channel, press that notification bell and get all the published videos firsthand. Also, don't forget to subscribe to our Blockchain Whispers on our website www.blockchainwhispers.com. Read all the posts from the very beginning and you will learn about our journey, why we are the best, and how Blockchain Whispers could help you achieve your financial goals and crypto knowledge. This is Blockchain Whispers, baby!